テレビ東京ロンドン支局のトム・シーザーです。From inside the Financial Times headquarters in the heart of the city of London, this is Inside FT, brought to you by TV Tokyo. Here's today's headline. UK banks have closed more than 1 in 3 branches over the past 5 years. UK banks are closing branches at an astonishing rate, with no signs of slowing down. Now, customers are being pushed towards mobile apps and digital-only lenders. But can these new technologies really serve everyone? To find out more about the modern banking landscape in the UK, we spoke with the Financial Times Fintech and banking reporter, Laith Al-Khalaf.
So it's no secret that banks have been disappearing from British high streets over the past more or less sort of 5 to 10 years, particularly at pace. So the figures that from the Office for National Statistics, the statistical agency in the UK, show that in 2019 there was just over 10,400 branches of banks, building societies and credit unions. 2024 that stood at about just under 7,000, so 6,870. That's a decline of about 34%. Of branches in 5 years, which is quite a staggering fall, obviously. And this has been accelerated, especially since the pandemic. Last year, over 10% of branches had closed in itself. And this is not just a statistical phenomenon. If you speak to anyone in the UK, they will all have witnessed shuttered bank, closed bank branches, or some sort of consolidation. This is a phenomenon that seems to be continuing at pace. In fact, by the end of November, 3 large lenders have announced that they intend to shut more than 100 branches. In fact, Santander, which is a Spanish lender with a big presence on UK high streets, announced this year its intentions to close 95 branches out of the 450 or so branches that it has in the UK. Lloyds as well, earlier this year, said that it would allow its customers from its 3 different divisions of Lloyds, Halifax and Bank of Scotland to use all of their services. That's seen as consolidation, which could result in more branch closures. So the evidence is that this is only going to increase over time. So what the banks would say is that this is a reflection of changing customer habits. They say, if you speak to these lenders, that people are more and more banking online. They're using their phones to do things like money transfers or do basic banking services. And as a result, footfall has fallen to these branches. Their argument is it's uneconomical to keep these branches open, and that what this is simply just a reflection of changing consumer habits and them adapting to it. So the UK has a large penetration of so-called Fintech apps. That's financial technology apps which allow you to perform basic banking services. On the continent, there's less of a penetration of that, so that could be one factor as to why there are more of these banks being closed. And the other thing is it's about cost cutting from UK big banks. They had large sprawling estates across the country, often in places with low populations. It's not economical, they say, to maintain this very costly infrastructure. The UK also has a fairly competitive lender landscape. There are a swathe of different traders on the high street, all of which are competing for different customers. And so as a result of that competition on high streets, at least 10 years ago, you could see 4 or 5 different lenders, 5 or 6 different lenders, all on the high street. So these branch closures have been fairly controversial because of the effects that they have disproportionately on older populations, less technologically savvy populations. While banks are correct to say that that British people are banking less in person at stores, the reality is that there's still, for an older cohort, they still rely on banking services in store. And so with the retrenchment from high street banks from the high street, the fear is among regulators and policymakers that you could end up having banking deserts, essentially, where there are no banks on a high street, theoretically, and which would leave a whole part of the population shut off from access to banking services. So that's been the fear amongst, or at least that's prompted the government and the Financial Conduct Authority, the FCA, which is the regulator, to discuss how banks can scale back their store estates whilst also maintaining a certain amount of accessibility for vulnerable elderly populations and the like, so that you don't shut those people off entirely. The other aspect is the use of cash. Elderly people are more likely to use cash in the UK, obviously, and so the fear is that with the retrenchment of banks from the high street, that people who rely on cash will be underserved. So to combat this and to make sure that the elderly and other populations are not underserved by the lack of branches, the industry has been creating banking hubs across UK high streets. These are essentially buildings on high streets where consumers can perform their basic banking activities. They're run by the post office, and it's a means of pooling the presence by banks. In other words, rather than having 5 different banks on a high street, you can instead have one building where everyone goes and has their basic banking needs met. Currently, there are 179 banking hubs on UK high streets, and last year banks pledged to open 350 within 5 years. So over the past decade, there has been the emergence of a number of digital-first banks in the UK, the likes of Revolut, which is the largest. You've also got Monzo, Starling Bank, and these are all digital banks with very user-friendly mobile phone applications, highly easy to use, very good for a digital literate, technologically savvy audience. And what they have done is they've drawn a younger demographic away from traditional lenders to use their slick applications on their phone. The effect of that on the traditional banks, your Lloyds, your NatWests, has been they've had to keep up and they've had to improve their digital offerings, improve their applications, and move their operations a lot more to be digitally focused. The reality is, it is correct to say that fewer consumers are banking in person and that they are indeed performing more of their banking services online. I suppose the obvious drawback is that leaves behind a certain amount of people, or it could potentially leave behind people who rely on those, and it obviously adds to the state of British high streets declining, the rise of, in the retail space, you've seen Amazon out-competing shops on the high street. This only sort of adds to the fact that British high streets are far less lively and are facing a decline. So I think that it has to, on some level, it makes rational sense for these businesses to cut back their in-person presence, but it needs to be done in a tactful way that won't mean that some people are left behind by it, obviously. With regards to the economy at large, it's not necessarily, people are still banking as much, they're just shifting how they're banking, right? So it's not as if this is commensurate with a massive fall in lending or in customers. I don't think. This is just that people are shifting their tastes and how they do it. I think that while online serves a huge amount of services very well, and you can sort of instantaneously shift money from any number of your accounts, your friends, pay bills, all that sort of thing. I think for perhaps more complex financial decisions, you will still need an in-person advisor. Think about sort of a mortgage. People will still, I believe, in some way try and use in-person stuff for that, services for that. Equally, business banking. I think that some business banking will still have that sort of in-person interaction. Whether we will ever go back to that 50 years ago, that sprawling estate where there's 5 banks on the high street and people head into them to go and do the most basic services, I think that is a relic of the past.
With bank branches disappearing from Britain's high streets, banking hubs like this one are emerging as a lifeline for those less comfortable with technology. While at the same time, digital-only lenders are rapidly reshaping the way we manage our money. Take Revolut, for example, an online-only neobank founded in 2015. Now, the UK's largest unicorn, with over 60 million worldwide users and a valuation of $75 billion. But this shift online also brings risks. A BBC investigation found that Revolut was named in more fraud complaints than any other UK bank, with some victims allegedly having over £100,000 stolen. With Revolut and other online banks currently pursuing full legal status, the question is now not only whether we can survive without physical banks, but whether this digital future of finance can truly be trusted. I'm Tom Caesar. Thank you for watching Inside FT.